All right, everyone, buckle up because the financial world is absolutely buzzing, and we've got the inside scoop right here on Bitcoin Bulletin. The pace of change is relentless, and staying ahead means knowing what's moving the markets right now asterisk. We're diving deep into the stories that are shaping the future of finance, and you're going to want to hear this. First up, we're talking about a major shift in corporate strategy that has everyone talking. Think massive treasury allocations, and a bold move that could redefine how major companies manage their assets. Then, get ready for a deep dive into the price action that's got traders on the edge of their seats. We're dissecting the charts and indicators to see if the current momentum is set to continue or if a major shift is on the horizon. And that's not all. We're also tackling a critical issue that affects everyday users: the rise of sophisticated scams targeting digital currency. We'll break down the tactics and tell you how to protect yourself. Finally, we're looking at the impact of new investment vehicles and what they mean for the broader market. This is the information you need to navigate the fast-paced world of digital assets. Don't go anywhere, and make sure you're subscribed and hitting that notification bell so you don't miss a single update. Corporate treasuries reach new heights. This is a significant moment, as major corporations are increasingly viewing Bitcoin as a strategic asset for their treasuries. The latest reports show an unprecedented surge in Bitcoin holdings by these entities, signaling a profound shift in traditional finance. The landscape of corporate finance is undergoing a seismic transformation, with Strategy Inc. leading the charge by dramatically increasing its Bitcoin holdings. Recent data reveals that Strategy Inc. has acquired an additional 4,048 BTC, pushing its total reserves to an astounding 636,505 BTC. This monumental acquisition now represents a substantial 3.031% of Bitcoin's total circulating supply, with a market valuation soaring to approximately $70.7 billion. This move by Strategy Inc. is not an isolated event, but rather a powerful indicator of a growing trend where corporations are strategically allocating significant portions of their treasury reserves into Bitcoin. The primary motivation behind this adoption is to hedge against the inherent volatility of traditional financial markets and to position Bitcoin as a robust store of value in an increasingly uncertain global economic climate. This strategic pivot towards Bitcoin by corporations is unfolding against a backdrop of evolving economic conditions and shifting investor sentiments. The U.S. government continues to hold the largest single reserve of Bitcoin, with an estimated 198,022 BTC, largely accumulated through forfeiture and seizure operations. Following closely is China, with approximately 190,000 BTC, also a result of confiscations and past regulatory actions. Meanwhile, the United Kingdom has signaled its intention to liquidate a portion of its Bitcoin holdings, a decision that could potentially diminish its standing as a major government holder. Strategy Inc.'s aggressive acquisition strategy mirrors that of other prominent companies like MicroStrategy and Tesla, which have been diligently building their Bitcoin treasuries over the past few years. The underlying rationale for these companies is the belief that Bitcoin functions as a digital alternative to gold, making it an attractive asset in an environment characterized by rising national debt and a weakening U.S. dollar. Industry experts are forecasting significant long-term growth for Bitcoin, with Bitwise Asset Management projecting a potential price of $1.3 million by 2035, driven by prevailing macroeconomic trends. The future price trajectory of Bitcoin remains a focal point of discussion among financial analysts and investors. While some, like the analyst known as Plancy, anticipate a gradual, steady appreciation over the next 7 years, others, such as Samson Mo from Jan 3, foresee a more dramatic price surge. Mo has even suggested the possibility of an Omega Candle event, a single-day price jump exceeding $100,000 that could propel Bitcoin towards the $1 million mark. However, alongside these optimistic projections, concerns are mounting regarding the potential risks associated with the increasing concentration of Bitcoin in corporate and institutional treasuries. Pav Hundal, lead analyst at Swiftex, has pointed out that a significant number of these large-scale Bitcoin acquisitions are financed through borrowed capital. This leveraged approach introduces a layer of vulnerability. Should credit markets tighten or risk premiums escalate, even well-capitalized entities might be compelled to divest their holdings, thereby introducing considerable volatility into the market. This situation highlights the intricate relationship between Bitcoin's long-term potential as a store of value and the liquidity dynamics of the traditional financial system. Furthermore, the role of governments as major Bitcoin holders is becoming increasingly significant. The US and China stand out with the largest government-controlled Bitcoin reserves, primarily accumulated through law enforcement actions. These holdings, however, are often not fully disclosed, making it challenging to ascertain the precise extent of national digital asset reserves. The growing adoption by institutional players and governments signifies a fundamental shift in perception, positioning Bitcoin as a legitimate reserve asset despite its speculative nature and price fluctuations. Audience impact. This trend is fueling discussions about Bitcoin's long-term viability as a reserve asset and has prompted many retail investors to reevaluate their own investment strategies in light of institutional adoption. Analysts are closely watching how these large holdings impact market stability. But is this corporate accumulation just the tip of the iceberg? Stay tuned as we break down the latest price movements and what they mean for your portfolio. Bitcoin price holds support amidst bullish signals. Bitcoin is currently defending a key support level around $110,000, showing resilience as bulls prepare for a potential push towards higher targets, indicating strong market sentiment. The cryptocurrency market is experiencing a dynamic period, with Bitcoin demonstrating remarkable strength by holding its ground near the $110,000 level despite a volatile start to September. This resilience is largely attributed to a resurgence in institutional demand, the ongoing expansion of Bitcoin holdings by major corporations, and positive signals from technical indicators that suggest further upward momentum. On September 2nd, Bitcoin experienced a significant surge, breaching the $111,000 mark, propelled by robust buying pressure and a substantial liquidation of bearish positions across major exchanges. Data analytics from CoinGlass indicated that approximately $60 million worth of short positions were liquidated within a 4-hour span, underscoring the current bullish momentum in the market. Prominent crypto analyst Donald Dean highlighted on the social platform X that Bitcoin is moving higher off support, identifying $118,000 as the next immediate target and setting a longer-term objective at $131,000. Dean's analysis is further substantiated by volume shelf analysis, a methodology that pinpoints areas of significant historical trading activity. Research published in the 2023 Journal of Financial Economics suggests that incorporating volume data can enhance the accuracy of short-term cryptocurrency price predictions by up to 15%. Despite the optimistic outlook, potential risks persist. Renowned trader Roman cautioned that Bitcoin's inability to maintain the $112,000 level could trigger a retracement towards $100,000. This price point is considered critical for sustaining the broader bull market trend. The market is keenly observing Bitcoin's ability to hold these key levels. Institutional involvement continues to be a dominant narrative in the Bitcoin market. Strategy Inc., a software giant increasingly recognized for its aggressive Bitcoin treasury strategy, recently disclosed a new acquisition of 4,048 BTC. This purchase, valued at approximately $449.3 million, was made at an average price of $110,981 per coin. According to a filing with the U.S. Securities and Exchange Commission, SEC, the company now manages a total of 636,505 BTC, accumulated at a cost basis of nearly $47 billion. This latest transaction was financed through a series of at-the-market equity offerings that collectively raised $471.8 million, reflecting the growing trend of corporate treasury adoption. Other firms, such as Ming Xiang Group and KindlyMD, have also announced substantial Bitcoin purchases in recent weeks, amounting to $483 million and $679 million, respectively. The potential admission of Strategy Inc. to the S&P 500 index could unlock billions in passive investment inflows, further integrating Bitcoin exposure into mainstream equity markets. The launch of the iShares Bitcoin Trust ETF, IBIT, in early 2024 has already proven to be a significant catalyst for institutional capital, bolstering Bitcoin's legitimacy on Wall Street. Analysts anticipate that ETF inflows could intensify as the market approaches the next Bitcoin halving event in 2025, an event historically associated with substantial bull runs. Technical analysts are also closely monitoring key resistance levels. Keith Allen of Material Indicators pointed out on X that strong technical resistance lives where the 100-day SMA has confluence at the trend line. He emphasized the necessity for Bitcoin bulls to successfully overcome these resistance points to sustain upward momentum. While bulls are targeting a breakout above $118,000, experts are cautioning about potential volatility in September, noting historical data that suggests the third week of the month can often be associated with price declines. This introduces an element of caution into the otherwise bullish sentiment. Crypto analyst Marcus Corvinus characterized the current market situation as a critical moment, observing that recent bearish candle patterns suggest a potential loss of control for some buyers. He warned that a breakdown here could confirm the end of the uptrend. Despite these cautionary notes, many remain confident in the prospect of continued price appreciation. Audience impact. This price action is keeping traders and investors on high alert, with significant attention on whether Bitcoin can break its resistance levels. Discussions are rife about the potential for new all-time highs and the impact of institutional buying on market dynamics. While the price charts paint a bullish picture, there's another side to the digital asset world that demands vigilance. We're now turning to a crucial public safety announcement regarding scams. Local sheriff issues stark warning on Bitcoin scams. Authorities are alerting the public to a rise in sophisticated scams utilizing Bitcoin ATMs, urging extreme caution to prevent residents from falling victim to financial fraud. McMinn County Sheriff Joe Guy has issued a critical advisory to residents, emphasizing the need for heightened vigilance when interacting with Bitcoin ATMs due to a notable increase in scam activities. Scammers are reportedly exploiting these automated machines, coercing victims into making payments under the false pretense of avoiding immediate arrest or legal repercussions. Sheriff Guy strongly advises against using Bitcoin ATMs for any fine payments, stating unequivocally that law enforcement agencies will never demand payment through such methods to prevent an arrest. These warnings are being disseminated through various channels, including posted notices on the Bitcoin ATMs themselves, designed to serve as a visible deterrent and educational tool for potential victims. The Sheriff's Department is urging anyone approached by a scammer demanding payment via Bitcoin ATM to contact local law enforcement immediately. This proactive measure aims to intercept fraudulent activities before they can be completed and to apprehend those responsible. The modus operandi described by Sheriff Guy involves scammers impersonating law enforcement officials, tax collectors, or other authority figures. They contact individuals through various means, often text messages, phone calls, or emails, and fabricate urgent situations, such as outstanding warrants, unpaid taxes, or missed jury duty. The scammer then instructs the victim to purchase cryptocurrency, typically Bitcoin, from an ATM and send the funds to a specific digital wallet address provided by the scammer. The urgency and threat of arrest are used to create panic, preventing the victim from thinking critically or verifying the legitimacy of the demand. It is imperative for the public to understand that legitimate government agencies and law enforcement entities operate under strict protocols and will never demand immediate payment through cryptocurrency ATMs to resolve legal issues or avoid arrest. Such demands are hallmarks of fraudulent schemes. Residents are encouraged to verify any suspicious communication by directly contacting the relevant agency using publicly available contact information, not the information provided by the caller or sender. The Sheriff's Department has highlighted that official communication from law enforcement typically involves formal documentation and established legal procedures, not unsolicited digital currency demands. Audience impact. This public service announcement is generating significant concern among local communities, with many residents sharing their own experiences or fears about potential scams. Social media channels are abuzz with advice and warnings, underscoring the widespread impact of such fraudulent activities. As we navigate these digital frontiers, vigilance is key. But what does this mean for the broader market? We're now looking at the impact of investment vehicles. Bitcoin ETPs capture significant market share. Exchange-traded products linked to Bitcoin are rapidly gaining traction, locking up a substantial portion of the total supply and reshaping investment strategies within the digital asset space. Exchange-traded products, ETPs, tracking Bitcoin have emerged as a dominant force in the market, demonstrating a remarkable ability to absorb a significant percentage of the cryptocurrency's total supply. Recent data indicates that these ETPs now account for approximately 7% of all Bitcoin in circulation, a figure that underscores their growing influence on market dynamics and investment flows. This substantial accumulation by ETPs signifies a pivotal moment, reflecting increased institutional acceptance and a growing demand for regulated, accessible investment vehicles in the digital asset sector. The proliferation of Bitcoin ETPs, particularly following the approval of spot Bitcoin ETFs in the United States, has opened the doors for a broader range of investors, including institutional players and retail participants, to gain exposure to the cryptocurrency without the complexities of direct ownership and custody. These products offer a streamlined approach to investing, often traded on traditional stock exchanges, thereby bridging the gap between conventional finance and the burgeoning world of digital assets. The ease of access and the perceived regulatory oversight associated with ETPs have been key drivers of their rapid adoption. Analysts suggest that the significant supply lockup by ETPs has tangible implications for Bitcoin's market dynamics. With a substantial portion of the circulating supply now held within these financial products, the available supply for trading and speculative purposes may be reduced. This scarcity, coupled with consistent demand from ETP inflows, could potentially exert upward pressure on Bitcoin's price. The trend aligns with the broader narrative of Bitcoin maturing as an asset class, increasingly being integrated into diversified investment portfolios. The impact extends beyond just price. The dominance of ETPs in holding Bitcoin supply also influences market sentiment and the behavior of other market participants. As more capital flows into these products, it validates Bitcoin's position as a legitimate investment vehicle and can attract further innovation and development within the crypto ecosystem. Furthermore, the regulatory clarity provided by ETP structures can foster greater confidence among hesitant investors, potentially leading to even higher adoption rates in the future. However, the concentration of supply within ETPs also presents potential risks. Should there be significant outflows from these products, perhaps triggered by adverse market conditions or regulatory shifts, it could lead to considerable selling pressure. The interconnectedness of the market means that large-scale movements within ETPs can have ripple effects across the entire cryptocurrency landscape. Therefore, while ETPs facilitate access and potentially drive demand, their influence also necessitates careful monitoring of market stability and liquidity. Audience impact. Investors are closely watching the flow of capital into Bitcoin ETPs, viewing it as a key indicator of institutional sentiment and a potential driver of future price action. Discussions are ongoing about the long-term implications of this supply concentration on market volatility and accessibility. And that brings us to the end of our deep dives for today. But before you go, a quick recap of everything we covered. And that's a wrap on today's Bitcoin Bulletin. We saw Strategy Inc., massively boost its Bitcoin holdings, signaling a major corporate treasury shift. Bitcoin's price is holding strong at $110K, with bulls eyeing a $131K breakout amid increasing institutional interest. A critical public safety warning was issued by local sheriffs regarding Bitcoin ATM scams, urging vigilance. Finally, Bitcoin ETPs are now locking up a significant 7% of the total supply, reshaping market dynamics. If you found this information valuable, smash that like button, subscribe for more essential updates, ring the notification bell so you never miss a beat, and let us know your thoughts in the comments below. Don't forget to follow us on all our social media channels for real-time insights. We'll see you in the next episode.